Well, welcome back, Peter McGuire. We didn't catch up last week. There was too much on rolling out and wrapping up a reporting season here in Australia. But the week ahead, brief me.
I think we've had a good week in the sense of what we experienced last week with Powell, his comments in the Fed. The mindset is very much that they're going to keep interest rates where they are for years ahead. So it's game on for the Fed in a game off mindset as far as rates. Are we getting a decade ahead of ourselves? Are we here in 2030 with these interest rate environment? Are we going to model what we experienced in Japan for the last 30 years? And we talk about that today with Abenomics and surrender there in the sense of he's resigning. And then the next part, of course, is what goes on this week with Friday being a non-farm payroll release. First Friday of the month, unemployment numbers in the States, and what impact does that have to the market, US dollar, gold, and a fair bit of other info.
So US jobs for recovery, there's some signals there. We're thinking calm and steady at the RBA. We're looking around the world. They talk fiscal cliffs in the US right now and non-farm payrolls. Just remind us, what is that all about?
We're at currently 10.2% unemployment, and we think that they'll hit 1.55 million jobs for August. That means it'll knock it down to around about 9.9% unemployment. Is that the real number? That's the first point. Second one is, in January, we're at 3.5%. So look at the differential. Third point, what does Powell do in the Fed? We're in an election campaign 2 months out. Trump seems to be really catching up to Biden. In some markets, as far as, pollsters, he's actually improved to the point he's in front. So there are so many different curveballs here. And you've got a very strong US-led recovery as far as the Dow, best August since '84. And you've got gold prices, US dollar off to its lows in a year, 11% off in really the last 5 months. So there are so many different moving parts to this, Will. All I know is that it's adding one word to it, and that's volatility.
Pete, let's talk about this chart here up on the screen. We've got Australian dollar versus its peers, year-to-date performance against the US dollar, rebased to 100. I mean, what are we seeing here?
I think it just shows for the viewer's standpoint that one clear thing. They're three commodity trading currencies. You've seen the same dollar move as far as US dollar fall over that period since March, massive fall to the downside. And we've been on the back, which the other two haven't. That's Australia's been on the back of China's great recovery. And you've seen a flatline response as far as Canadian dollar, the Loonie, and the New Zealand dollar. So whilst they both got out of the blocks fairly strong, we have really ratcheted further up, and I think there's even further upside because that US dollar will come under continued pressure, because I think Trump and his whole agenda at the moment, Will, is very much export his way out of this whole dilemma.
Okay, so the Aussie's likely to shrug off all the domestic data we're seeing.
I think so. I feel as though that our interest rate's always been a little bit higher than everyone else's, which is a common effect, and that's really attracted a lot of funds. We've got, big projects here as far as supplying the world with agriculture and minerals, and I feel as though that appetite from the world will remain. So it's going to be a sweet spot for Australia in a lot of ways.
Looking further at the yen strength, I mean, Abenomics is coming into play. We saw some news last week. He's set to retire.
Yep, very much so. Health issues, and the longest term or the longest tenure, 8 years as far as Japanese leader. The Abenomics story, as far as couldn't get inflation rates to where they really wanted, and you're talking about a very low interest rate environment. So we've seen that, the yen strength, the dollar demise, and it's been a big rebound. Where it goes from here, possibly a little bit of sideways or actually a contraction against the US dollar for the uncertainty. Who's going to fill the gap? There are four main players out there that have thrown their hat in the ring. So it's just a wait and see approach what happens over the next matter of weeks.
And what signals would be looking at? The Bank of Japan perhaps is indicating here that it doesn't have too many tools left in its toolbox.
No, it doesn't. And when you're thinking about what the Japanese market peaked at 39,000 points in '89, crashed to 8,000. Now it's back at about that $23,000 point mark as far as the Nikkei. They haven't been able to get inflation to where they really wanted, and they've got a historically low interest rate environment. So I just look at it, we're tipping the same ingredients of that cake into our cake, and the US are, and certainly Europe. Are we in the same mindset? Have we got 30 years of historically low rates ahead of us? Is that where we're going? And maybe that's the case. Powell came out and said he's got no mindset as far as raising rates. So possibly we're going to follow that Japanese mindset.
Pete, Eurozone inflation year-on-year change. So it looks like the pandemic impact has really pushed it down towards zero, right?
Absolutely, and I think any leader or certainly from an economic side, has wanted that higher inflation. But with historically low interest rates and a pandemic, I suppose that's the number. That's the reality, and that's what the market tells us. Fairly low inputs as far as energy pricing. We've got crude prices still range bound that 42 to 45. Thought there might have been a breakout with Lowe last week. The hurricane, certainly devastation on the Louisiana coast, but the market is still very, very tight, range bound. So there's been no fast money as far as speculation on that energy trade. It's still finding gold. And at the present time, you'd have to say that inflation across the world is very, very contained.
Just to be clear on this chart here, we're looking at a small rally here sort of in the last couple of months, but
yes.
The forecast really is that it's going to dip.
Absolutely. That's where we're looking, and it's further softness, and that's demonstrated on the graph. And the numbers don't lie, and they're the inputs, and that's telling us the story.
So Pete, non-farm payrolls, big news this week coming out on Friday. Looking at the chart here, is this rebound losing steam?
Well, I think so. Though we'll get a pretty good read, Will, 1.55, that's what the analysts are suggesting, 1.55 million re-employed. The issue is we're going to 9.9% unemployment. Is that the true number? And the next part of it is, where does that play in another quarters? This is the reality now. We've gone through that summer period in the States, their August numbers. Let's get down to October and November in an election campaign. Is Biden the man that's going to lead us out of this charge? Is it going to be Trump? And what's the story going to look like at Christmas? Many people are just looking in the vision mirror and go, oh, this is what happened in summer. A little bit of fool's paradise. We're heading towards, I think, in a lot of ways, is certainly the numbers are pointing to that. It's going to be very much a dire Christmas, and certainly a very, very weak 2021. And
just talking this chart, we've got unemployment rate here in the orange line, which is dropped to 10. We're thinking it might drop below 10 down into the 9s.
Yep.
We're thinking non-farm payroll changes. It again looks like it, at least at best, is going to break even with with its immediate prior performance. Who pays?
Well, who pays has got to be the government, and we've got a lot of mouths to feed, and hopefully they can work through that. And it's going to be, I think, for many, many months ahead. Frydenberg's the same issue as far as Australia. We're very conscious of what's going on in Victoria. That's our central theme, a state that's been locked down. Where are we in 2021? And these are workings. These are uncharted territories. And that's why you've got central bankers with the same mindset. Interest rates at historically low numbers. They're getting all the data points. They're getting the economic reads on a minute-to-minute basis, and they know the strength of if there is a recovery.
All right, let's wrap this. We talk gold a lot, so talk me through the daily performance chart here.
Have a look at the gold market. Absolutely shot the ball out of the park. It's been extraordinary. It's up about $40, $45 in Asia trade, and what we saw over the weekend in US. Dollar index just being spanked to the downside, 92.3. Further falls. I think it's just for the viewers, that dollar index was at 103 in March. So that's a 10 to 11% fall. I think there's every chance you're going to see possibly even by Trump, by the election, you might see a 89 to a 90 handle. So you're 2 months out. There's no reason why you don't see 1% coming off it every month, maybe a little bit more.
Pete, in 60 seconds or less, wrap the week for me ahead. We've covered some territory. What are your key takeaways?
Some China numbers as far as ISMs, US as far as non-farm payrolls. What's happening here from Philip Lowe and the Reserve Bank in Australia? Where do we go as far as tech stocks in the States? Gold price, the uneasiness as far as US dollar and that ramp up. I don't see anything dramatic on a seasonality in the sense of hurricanes. We've dealt with that part last week, and let's hope we don't get many more, but I'm sure that we will over this season. I'm conscious as far as that US dollar. That's really the driver after Powell's comments, how do Fed chairs and how do Reserve Bank chairs face the week ahead. So it's going to be an interesting one. Great time to be a trader. And don't forget that you don't need to marry a trade, Will. You're only in it for a short period of time.
Peter McGuire, thanks for speaking with me.
Thank you, Will.